All right, hey there. Geez, what is it? Tuesday, right? So happy good Tuesday there to you guys. Christopher Hanks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on the 24th of August, 2021 in beautiful Bernie, Texas. And yeah, I had I had this set up with the countdown, everything going, but I forgot to change the output, so it was still going to Vimeo for what we do with our tier 3 live streams. We did a Wyckoff one yesterday. So anyway, that's why you didn't get the countdown here. Good to see y'all checking in. I see Navlusians here. Trader XO, what's up, boss? Good to see you checking in, man. Jared the Great is here. Samir, what's going on, man? Thanks checking in from south of France next to the pool. I don't know exactly which pool he's talking about, but it sounds pretty nice. Let's see here. Music, there is music. What's going on? Premium German cars. Doesn't even say hello, just says dump. We'll take a look at that, guys. We got a couple of possibilities looking on with Bitcoin here. I'm in no way worried that we're going to have some huge drop or anything. It just, right now, it all looks like a pullback. Just a local pullback, so no big deal right now. Let me see here. Spidey Shuffle, what's up, man? Good to see you catching me live here. Michael, what's up, man? Man, Trader XO, I'm doing well, my friend. I'm doing well. Just for those of you that didn't notice, I went ahead and ordered one of those Hummer EVs, the SUV. Everybody else is going for that Tesla Cybertruck thing, and just not my style. I like comfort. I like all the good stuff and whatever. I like the design, so went with the Hummer. So, but, I have to go wait for delivery in 2023. So, good times, right? It'll actually be my first electric vehicle. We'll see how that works. I like to drive around a bit and travel down to the coast and all those things. So, I'm not sure it'll be a great vehicle anytime soon for any kind of traveling like that. But that's all right. I got the gas guzzler, so it's all right. Let me see here. Yeah, thanks, man. Hopefully you're doing well over there in the UK, man. That's where you are, right? Man, it's been a summer, hasn't it, guys? How are you guys feeling? Are you like, I don't know, man. Are you guys feeling good? Are you feeling a little worried? How do you feel about the end of the year coming in? With the markets and everything. I did post on Twitter, if you guys caught that, some kind of things that are going on. Well, not going on, but they've happened in August, So the Great Depression, the all-time high before the Great Depression kicked in was August of 1929. October is when they had the large drop. For Black Friday, if you guys know what that was, back in October of 1987, huge thing. I think it dropped, at the time, it dropped something like 20% or 22%, the stock market did, the Dow Jones, in the day. That was huge. For the month, I think they dropped something like 40% for the month. And that came at the end of the month. I think it was I think it was October 19th was the day, I believe it was. But anyway, that also happened in August. The top happened in August. And then that big drop happened in October of that year. So I don't know, again, I've been talking about how these indicators that we watch are extremes that go beyond what they've been, in all these other times previously, well beyond what they've been in the great financial crisis, beyond the dot-com bubble burst there, beyond what they were for the 1987 Black Monday there, beyond what they were even for the setup right before the Great Depression. So, we're at extremes beyond those levels. And I know people want to believe that it can continue going up. Maybe it does a bit. I don't know. But I'm not of the belief that ultimately the Fed controls the market. I don't believe that. I think they've got, if they can convince people in the interim, in the near term, they've got a little bit of control there. But as far as ultimate control of the market, I don't believe that. It's never been shown. As a matter of fact, what it's shown is that they don't have control. They have this limited control. But at some point, the people say, listen, it's too much. I can't do this anymore. I'm not going to do this anymore. And then there's absolutely nothing that the Fed can do. And that's what we get, every time, it finally happens out there, again, the GFC, .com, Black Monday there, the Great Depression, all that kind of stuff. I think the Fed's dealing with with their manipulation of the market is limited in duration. I don't believe it's anything that's that's any kind of long-term. They ultimately control the market. Because if they did, we wouldn't have had all these things that we've had, right? We wouldn't have had all these breakdowns and whatever. If the Fed controls the market, there would be no bubble bursting going on along the way. That's as simple as it is, guys. And sometimes I think people fail to just use basic logic when they think of things. They think, oh, because it hasn't burst yet, that the Fed controls it. No, they've got this short-term kind of manipulation going there, but at some point the people, decide that they've had enough and they can't do it anymore, and they stop doing the things that the Fed needs them to do to keep the market going up. The Fed cannot keep the market going up on its own. Again, if the Fed had ultimate control over the market, we wouldn't have had these recessions and the GFC and stuff like that we've had. They would have been able to just keep it from happening, right? So, guys, be sure you're using your common sense. Think things through. It's easy to get caught up, especially if you're online with social media, to get caught up in what everybody else is doing, everybody else is saying. But guys, just remember, most of that is just an echo chamber for, honestly, mostly people like yourself who are new to trading, who don't really know what they don't know. Things sound like they make sense, but then they don't really think about it. Everybody's in a rush for their sound bites today. Oh, wait, you want to take 30 minutes to tell me, to explain something to me? I don't have time for that. Give me it in 2 minutes. Well, if I give it to you in 2 minutes, you're not going to understand it. And so, that's life. It is what it is. You got to decide what's important to you. Are you serious about trading and understanding and learning, or are you just looking for somebody to tell you where to buy and sell? Because if you're doing that, you're going to lose your money down the road anyway. So just some thoughts on that, guys, okay? Let's see here. Let me catch up with you guys. Man, I love that you guys are talkative today. I love that. Let's see here. Bill, what's going on, buddy? Not checking in from a pool, it looks like. Though I know Bill likes to get in his swimming when he can. Let's see here. You can't send pictures of the pool there, Hank? Let's just say it's nice. Okay, well, we can say that. Let me see here. Is that Hyder? I hope I said your name correctly. Good to see you checking in. Data always checking in here. Boris, my friend, is here as well. Let's see here. Man, you aren't kidding, man. Trader XO here talking about blessed to be in this market. What an epic run we've had. Just sat heavy in stables here and fiat. Life's good. Yeah. I mean, it is. It really is. I think you guys, I think you get too caught up at times, really worried about things that you have no control over. Or you worry about, okay, maybe the top's coming in, so it keeps you fearful of actually entering a trade. And this is where, guys, risk management is so important. If you're doing proper risk management, you shouldn't be fearful of entering a trade, because if you take a loss, it's going to be very minimal. It's nothing to even get upset about at all. It's so small. So I think it's just a lot of that, I think, going on there. People kind of stress out and then life, comes in there in the market, and then they kind of just keep themselves from entering in. And that's too bad, because there's a lot of money to be made. We've had a lot of this, I've had to learn a lot about how to talk to new traders, over the last years now that we've been doing this, because, when you come in, whether you're a new trader or not, you're going to take info based on your idea of what's going on, or your idea of what you think you know. And so a lot of that time, unfortunately, especially if you're a new trader, is not really thinking things through. It's very, you're going to hear what you want to hear kind of thing. And so I can't force you guys to understand what I try and say. But I constantly review how I'm speaking and the words I'm using, the way I'm putting it out there, to hopefully provide the info in a way that is least likely to lead you to doing those things. Something that's able to help you think through it and to get where I'm trying to get you as far as thought processes go. So, yeah, you don't want to. You can always, guys, even if you think the end of the trend is coming, you can still trade it. We talk often about these, how at the end of a trend, there's that big say, that kind of saying that says something along the lines of the market can stay irrational longer than you can stay liquid. And that has a couple of parts there. One is that's especially true if you're not using proper risk management. Two is, again, that's the idea that people are, getting scared and not getting in, as price continues to go up, and then they kick themselves because they see price leaving without them, and then they finally get in, but right there at the top. So just understand, guys, you can continue to trade that trend until it's no longer valid. But be sure you're using proper risk management. As long as you're doing that, you'll be fine. Okay? Let me see here. Yeah, man. Oh, man. Bonds. Jackson Hole's coming up this week, guys. But it's online. And I don't know, man. It's virtual. So I don't know that Powell's going to feel really pressed to kind of say, yeah, tapering. There's kind of musings about it. Some of the board members want to, they're talking about needing to taper and whatnot. But the Fed itself hasn't committed to it. But remember, a lot of what goes on with at least your short to midterm market movements are based on what the Fed says rather than what they do. And so, I've been talking about real rates for a while now. And they've been going up. And so, I've been talking about the idea that Fed's going to, it seems like they're going to have to raise rates, even though they said they don't want to. Just a couple of months ago, they're like, nope, not raising rates till 2024, right? And all of a sudden, the last few months, they're like, well, maybe. And I was talking about the idea that they would probably look at having to raise rates here before the end of the year. The problem is if they do that, what they're doing here with the bond purchases, if they slow down that QE, those bond purchases, then all these zombie companies out there that are just really being held alive because the Fed subsidized them more or less, or it's the belief that the Fed will keep them from drowning, so that people are into buying in them, right? And so if the QE tapers there, if we taper that and stop, slow down that bond buying, what does that do with the market? And I think that ends up having a negative connotation on the market. And the market, I believe, is not very strong. I believe it's really just kind of barely being held there. And so that kind of negative sentiment coming in, I think, can cause a big issue with what we're looking at in terms of where are things going to go, where are they headed. And so, again, we've got everybody talking about how this is the beginning of the roaring 20s, comparing it to 1921, I guess. That was the pullback before the 8-year run to 1929 when we got the top there. But the indicators are different. In 1921, the indicators were bottomed. Right now, the indicators are topped. So it's hard for me, as somebody who's been doing this a while, to really kind of see how do we get even 5 years more of growth, or 4 or 3 years. It's really hard to fathom that. I'm not saying it's impossible to happen because there are no guarantees. But if we look at things, if we look at the reverse repo facilities are now permanent, right? And reverse repo, why are they permanent? Because there's a desire for them. The banks, the money markets, they want to put their money in these things overnight. And what that does, that pulls liquidity out of the market, right? But you have to ask yourself, again, and I keep posing this question to you, if the economy's doing so well, which, as I just mentioned, I don't believe it is, but if it is, then why are the banks, these money markets, everything, putting their money in the reverse repo? Why are they doing this overnight short-term lending thing to the government? They get the bonds in return, and they get back and paid a little bit of interest. Why are they not, significantly increasing their loans? There is a reason for that, guys. They're not stupid. They don't want to get caught holding the bag. Economy goes off the cliff. They've got all these loans out there that you can't afford to pay, and all of a sudden they're on the hook. Next thing you know, it's 2008 with the banks again, right? And you go, oh, but the banks were saved. No, some of the big banks were saved. Over 1,000 banks went under, something like that, between, that 2008 and 2012 or whatever, going in that range there. It's huge. There's a lot of banks went out of business or were taken over by the government and put over. And so, man, there's just so much going on right now that is against the idea that this bull run is going to continue for years and years and years. That doesn't mean it can't continue for a bit more here and do its thing. But, again, I posted, August of 87 and then August of 29 were when these, markets topped out. 2 months later, October crash, right? So it doesn't mean that we'll see the same thing here. But it's definitely something to keep in mind. It's the end of the year, fourth quarter. Normally there's, rebalancing and stuff like that going on. So a lot of things to consider with all that. Again, ultimately, I'm of the belief that the Fed is going to have to raise rates whether they want to or not. And that's just going to cause them issues. I think they've backed themselves in a corner here with what they're trying to do, between QE there and what they're doing otherwise. The reverse repo just kind of saps out that extra liquidity that these big guys are holding. Again, QE is money going into to inflate. The reason for QE basically is to inflate asset prices. The rich get richer. Again, the QE money flows to the primary dealers who then trade it off for the bonds, treasuries. And so really it just becomes that's why we talk about it as kind of just a ledger thing. It doesn't actually enter the economy here. But it gets the assets, it lifts them up, it keeps the companies afloat. People believe that things are still going okay, so people go out and spend money. It's all about going out and taking out new loans and then spending that money and churning it through the economy. But that year-over-year money supply, a huge drop this past year. Now, overall money supply is up, of course. But it's just up in terms of what the Fed is doing. It's not up in terms of, you're not looking at that number in terms of what's actually being loaned out by the banks. And if you're looking at how does inflation really happen, it happens at the bank level when they're creating those loans. And so if you're paying them off and you're not taking them out, these are disinflationary at least and potentially deflationary events. Because think about it. If it's inflationary to create money, which is what happens at the bank level when you're going to get a loan, right? Create money out of thin air. Everybody talks about it, right? It's fractional reserve banking. So if you're increasing that money supply there, okay, so that's the real inflation that you're looking at. That's the inflation that gets you, right? If, however, you're paying back those loans, then you're putting money back in. You're not taking it out. So it's disinflationary or deflationary with the money supply, right? And you say, okay, Chris, well, what about all this inflation that we're happening here? What about all these higher prices that we're getting? And I'm saying, dude, it's just bottleneck. It's supply constraints. It's stuff because of the pandemic and how everything's shut down and whatnot. And there's the potential we may see a secondary event like this with this whole Delta strain coming out there. I'm keeping track. I homeschool my son, but I'm keeping track of what's going on with these schools that have opened here in the last few weeks. And lots of people are getting exposed or getting catching COVID and whatnot as these schools have reopened. And it makes me wonder, are they going to just go ahead and say, schools need to shut down again? Everybody go back online. And, if they're doing that, then businesses are, potentially looking at doing the same thing. Businesses are mandating, shots now. A lot of them are mandating. I know the federal government here in the U.S. is mandating COVID shots for employees and whatnot. But what are we seeing? We're seeing more and more people who are fully vaccinated ending up in the hospital, and not even just ending up in the hospital, but dying as well. And I'm not saying, it's good or bad or worse or better or whatever for people. I'm just saying what we're seeing is they're mandating the shots, but we're seeing increasing numbers of those who have been fully vaccinated passing. And so what kind of effect is that going to have on businesses now as they were just now attempting to get back into the whole groove of things, right? Are they going to make everybody work from home again? So, all this stuff kind of comes in there. And, again, with this, like I said, so many of these companies are barely hanging on as it is. And if all this is happening, and at the same time, government, the Fed starts tapering, it starts reducing those bond buys out there, right? So the weakest of the companies start going out. People start losing their jobs. We have the moratorium on evictions, which was ended. But in some levels, this is what the government's doing. In some areas where you've seen these flare-ups of Delta, strong flare-ups, they've kept the moratorium going. They've extended it there. Student loans, with the moratorium, the non-payment moratorium there was set to expire in September of this year. That's been extended till the end of January of next year. So, again, if people are in their jobs, if they can't pay, the homes are getting foreclosed on, they're getting evicted. I mean, it creates a real cluster. I won't say that word. But of things that happened at one point and just could really just be like, that's it. I believe the supports are pretty thin as it is right now. So, yeah. Let me see here. Ace and Risk, what's up? Cue the action. Good to see you guys. Let's see here. Jello Man, what's going on? Let me see here. Droid DR, what's up there? High or low crypto checking in today. Yeah, guys, again, the whole idea is, at the end of the day, I could be completely wrong. And I don't know how many other people out there telling you that, but that's the reality of the situation. But with what's going on right here, until I'm proven wrong, it's a pretty realistic kind of scenario that we're looking at, I believe. I don't see how things get better, at this point right now, because there are so many ambiguities, so many variances going on at the moment here that could change things. Because of not because of themselves, but because of how government and people respond. Remember, guys, I keep telling you the charts. What we're seeing here is not the actual market. This is just a visual representation. The market is actually you and me. It's us going out there and exchanging or not exchanging. That's the market. So the social mood is what determines what's going on with the market, which determines what we're seeing in the charts. And that's why we're often ahead of the game here. We're often entering and exiting positions before big news events because we're, trying to follow along with that social mood there. It turns out to be quite effective. Let me see here. Hey there, Lewis Winthorpe III. Win progression to I don't know if you guys say GIF or GIF. I say GIF. NFTs. Esteban, what's up, man? Venture, what's up? Driving to Fredericksburg and enjoying the stream today? Man, Fredericksburg, yeah. A little German town just north of us, probably about 40 minutes or so, 30 minutes. As soon as we agree on how to pronounce that, Hank. All right, guys. So there's what I'm kind of, this is the whole big thing. If you are in crypto and you are not interested in all this stuff I just talked about, be prepared to potentially lose your money. That we are at a very significant influx in time these past few years in terms of the larger market. Like I said, I talked right here about these times, right? So if we look at the Dow Jones here, going all the way back here to the 1900s, early 1900s. See, this is where we're talking about right here. See, this was the top here in August of 29. And then we had 2 months later, we had the big drop right there in October. And if we keep on coming over here, we go to 1987. Again, the top was in August, and then the big drop there was in October. Now, what's interesting is not 1987, not prior to 1987, and not prior to the Great Depression, did we have anything similar to this right here? This big drop right here, right? And you go, well, maybe it's just a few months off. It was the end of the year coming in. It was March with a drop there, and that's it. But I always tell you guys, when it comes to markets in general, not just stock market or crypto, anything like that, when things are happening differently than they've ever really happened before, when things are going on in a different way, this is when you need to pay attention, because the market tends to repeat itself. And when it does something that's not a repetition, something that's out of character, that should have your attention. That's usually a clue that, hey, pay attention. And so we've got this happening here. And I've been mentioning since this happened at first, and I was thinking this was potentially drop down, right? And it wasn't. We've got this move up. So then this becomes this idea of, okay, so you've got this A, B, C, D, E. So 3, 4, this becomes 5, right? This is your wake-up call to let you know this is the end of the end potentially here. And that's the way I'm viewing it. That's the way I viewed it. We always look for, okay, is there a top coming in? Well, here's what we're going to look for. But if it breaks out, no, that's not. We'll just readjust the count. But that's what I keep talking to you guys about. You can continue with the trend. Just be aware of what's going on. Use proper risk management. But don't, sit out because you're scared that you're going to lose your money. Now, that doesn't mean you jump in and without good risk management, and you just, lolly-dolly along, it's going to continue up forever, right? Stocks always go up, right? But this is important because crypto is a very risky asset. It's a risk-on asset. And if this drops, this signals that the economy's rolling off a cliff. And if that happens, the last thing that anybody with real money does is buy risky assets. They're getting out of there, jumping over here to TLT. Like this. TLT is your long-term government securities. Well, it's the ETF based on it. But, this is all about those long-term government securities. And that's where people go when they're scared. Because the government guarantees the value of what you have, right? What you have in it. When it's done, they pay you that value back. Plus, some interest. It's that same. So the only way, this is about as close to guaranteeing that you keep your wealth as you can get. Because the only way this doesn't happen is if government goes under. The government dies off. And I know a lot of you out there romanticizing the end of the government, blah, blah, blah. There's a lot of romanticize the death of the dollar, all that stuff. People have been doing this for, years and years and years. It is what it is. Do I think that, that the government's going to continue on indefinitely? No. Again, I could refer you guys to another text that's a pretty interesting read, The Fourth Turning. Check that out if you want. But it talks about historical cycles, social cycles. And if you guys haven't figured out yet, if you're new and your first time seeing me, I'm all about cycles and social cycles especially. Because again, that's what determines what goes on with your assets, what asset prices, what goes on, so then, your markets. So if you're into Bitcoin and you're not paying attention to what may be happening here, then you're not doing yourself any favors. And I think we got a lot about that out there. We've got a lot of bad info going. We've got a lot of talk of hyperinflation. It's nonsense, guys. We've got a lot of talk about the Fed, ultimately can hold up the markets. Again, as I told you already, if they could, we wouldn't have had the GFC in 2008. We wouldn't have had the dot-com bubble in 2000. We wouldn't have had 1987. We wouldn't have had the Great Depression. If the government, if the Fed itself could control the markets, it would. Because it doesn't do any good for it to allow them to drop. Remember, the Fed's got 2 mandates. Optimal employment and, of course, keeping the markets afloat, right? That's the idea. Keep markets going up. Keeping employment up. It's a dual mandate. So, but these are things that are passed off by a lot of new traders who go in there. And they're just repeating sound bites because they sound like they make sense if you don't think about them for 2 minutes. Don't be those people. You guys are better than that. Don't do that. When am I moving to PR? I don't know yet, man. Gosh, it's so tempting. It's so tempting. And I've looked at a few properties over there. But, gosh, just recently, they're with what I do, with TWC here and with you guys doing live streaming here, I need this. I need electricity and I need internet connection. And, they have a lot of issues with that stuff over there. Consistently, it seems like. And that's the one thing that's really kept me from going there already. So we'll see what happens. I mean, for me, what I do, as long as the business could keep going, I mean, that would be fantastic in terms of taxes. The tax benefit of that would just be insane. Not to mention beautiful beaches, wonderful people, right? Man, I love the people of Puerto Rico. But, you know, that doesn't do me any good if business can't continue. So that's kind of the things I'm looking at there. You know. Yeah, the whole infrastructure is the big issue for me. So, you know, until then, I eat my taxes. You know, I pay them as I have to. I grumble the entire time. I curse the IRS, and, you know, and I do it, though, because it is what it is, right? Let's see here. Rules of the channel we need to touch at the top still. Yeah, we could, or not. Doesn't always touch the top on the last move. You know, if you're looking at channels here. We're at the EQ right here of this local kind of channel, as you can see with that. But, you know, again, guys, I wouldn't expect, in the grand scheme of things, for the economy to roll over and continue moving down and Bitcoin to continue moving up. It doesn't make any sense from a risk perspective. Now, maybe you, with your $200 or $2,000 or whatever, you might be willing to keep it in there and do it. But people with 20 million, 100 million, you know, that aren't just, you know, they made their money from Bitcoin alone, just sitting in there. You know, people that have been investing and doing stuff outside of crypto, you know, prior to crypto ever being there. I mean, these people are not just going to sit there and put more money into crypto because it doesn't make any sense to them. All right? I can always come to Switzerland. Dude, I want to visit. I want to visit at least. Switzerland looks amazing. Doesn't Texas have a lot of outages too? It seems like it lately, right? I don't know, man. I'm going to buy a property here, I think, after I get out this lease this coming year. And I'm going to go ahead and put a solar array in there so I don't have to worry about it going out of power again. That's tough, man. Get it on my own little grid as well. You need to spend a majority of the I tell you right, or you got to spend a majority of the year there. Yeah, I have no problem with that. I spent 3 years, you know, in Hawaii as I was growing up, and I've spent a lot of years in Florida, and so, you know, I'm all good with the beaches, man. Take a little trip out to somewhere else every once in a while, hang around with the beautiful views and the beautiful beaches, the beautiful people there in Puerto Rico. I'm okay with that. But anyway, yes. So, yeah, lots of plans. I don't even know, man. You know, it depends on what goes on with this whole COVID thing and travel and everything now. I don't know how that's all going to change everything. But here we go with Bitcoin. So we had a couple of different things we were watching here. So this purple count is out because price has broken down below the swing low here. So purple count is out. Now, I've got a couple other things. What I basically told Discord was, if we drop below that swing low, look for a reversal off the pivot, the S1, or right around this swing, this wave A swing low over here. And so the reason why we looked at, so this last one says, okay, maybe we've got an ABC down, and then following the black count here, and an ABC up, and then we've got 5 coming down here as a flat correction. That's a pretty deep flat correction coming off one. But that comes off the idea that we, instead of ending over here with the red count, this was that alternate count that I was watching, which says we topped out over here with wave 1. So you get A, you get B, and then you get C here, and then you go up. Now, prior to that, there's also the possibility, we've got this red count here. And this red count says, okay, we've got 1, 2 here instead of the black 1 up here. So the 1 ends up down here, right? So 1, 2. And then you get a 1, 2 here as a flat correction. And then this is 1, and we're working on wave 2 of this 3 here, right? So basically what you're looking at is, let me see if I can draw this with something here to help you guys. So you've got your 1 coming up here, and then 2. And then you've got a 1, 2 is a flat. And then you get a 1, 2 of your 3 here, your Roman numeral 3, getting up there. So 2 here or here, could get you that move up on the breakout there to get you a wave 3, okay? Now, obviously, this red count becomes invalidated if price drops below this swing low right here at 43,955. So if we're dropping below that, then the red count is out at that point. And so the other possibility here, is maybe this wave 1 ends over here. So you have another flat correction. So you have ABC down for A, ABC up for B, 1, 2, 3, 4, and you get a 5 down toward this S1 pivot. So, this is a lot of different counts, and if you're not used to Elliott Wave, it can be very confusing, which is why I told this court, I said, listen, here's what you're looking for. Either price stays above the swing low here and breaks out of this channel, and we're good to go. But it didn't. It dropped down below, so that one was out. So the next thing is to watch for a reversal off the pivot. So if it reverses off this pivot and breaks out above this red line right here at 49,875 and 90 cents, then we should be good to go. That should be the bottom. We should be good to go. And this red count, this 1, 2, is likely legit, is good to go. We're done, right? And so if that happens, we're probably looking for a minimum wave 3 up here at, let's see here. If we look at that as a 1 and that as a 2, that gives us wave 3 up here at around, let me see if I can get that up there, 58,473. So if we get this reversal, this I'm thinking looks pretty good. And why does it look pretty good? Because if we're looking at this, we moved in sideways between the pivot and the R1. We're just coming down in 3 waves here to test the pivot. So if we break up above that, that locks those 3 waves in. That should be corrective, and we head up. So from a pivot standpoint, everything else aside, we retested the pivot as support after moving in sideways, and then we break out above these 2 swing highs here. That should, and if you're just trading pivots, that should be good to go. You should be heading on up. And so right here on the 1 hour, you can see that we've dropped down below in the RSI down into oversold. Stochk RSI bottomed out and oversold here. We can zoom over here to the 4 hour. Let's see here. The 4 hour Stochk RSI is almost, it's just about bottomed out here and oversold. There it is, bottomed out there and oversold. So, potentially 4 hours ready to zoom on up and head on up, right? We're getting a potential, we've got another 3 hours and 15 minutes here. Right now, a possible hammer forming here, but again, long time on the 4 hour. But should still watch. We're showing that demand is showing up. And we're getting, of course, at this previous area of resistance, which makes sense. So if we're looking at that, again, same kind of idea here. Maybe a hammerish candle starting to form here. A bit of much of a wick on top there, but nonetheless, getting kind of there. So a lot of possibility that may be it. But if it continues to break down through the pivot, of course, I want to look down here at this area right here. So this S1 pivot at about 48,570 to the high volume node at about 45,757. 45,570 to 45,790 kind of area. There we go. I would be looking at that. Again, in terms of pivots, if you break down through the pivot and you get a reversal off your S1 that takes it back up impulsively above the pivot, that's usually a signal that the bottom was made there at the S1 and we're heading up. Then you just want to see the breakout of the swing high and the swing high. Interior, exterior swing highs. So, again, you don't have to understand the counts. You don't have to, wrap your head around all these different counts or whatever the possibilities there. You just have to understand where you're looking at. And so finally, of course, if it goes down through the S1, then we're, more interested at this kind of, this wave A, the black count swing low down here. I think we make a good case right now to potentially rally off here, but we've got to see it get up above that swing high before we really get excited about it. Let me see here. Let me kind of catch up with you guys here. Will there be a flight to the moon? Is it worth taking out a loan and buying Bitcoin? Never. Never. Let's see here. Yeah, never buy. Guys, I know, some people go out there like, oh, yeah, I sold the house and put all my money into Bitcoin and now I'm wealthy. You know what, guys, listen. That kind of risk, I think, personally, as somebody's been doing this for a long time, is just ridiculous. Yes, you may get lucky, but don't kid yourself into thinking you're that smart. You're not that smart. You were lucky. Most people aren't that lucky. See, that's the thing about luck. Luck hits a few people, guys, in the grand scheme of things. The odds are against you to be lucky. But yet everybody wants to trade the market like it's all about luck, and they're going to have no problems. That's why you guys end up losing all the money. Maybe not you in particular right now, but when, again, as I tell you, the new traders come in and they're bone dry, empty their capital account within 3 months. 90 to 95% of them out in the first 3 months. Many of them having added more and more money during that 3 months, not just their initial deposit. Why would you put yourself in this situation? So yeah. Silvio, welcome and thank you, my friend. But yeah, man, guys, listen. Life in general is about managing risk. If you didn't know that, there's your wake-up call. Life in general is about managing risk. And those who do it well end up enjoying life. They have a good life. They're happy with life. Those who do it poorly, which are most people, because one, they're not even clued into the fact that it's about managing risk, and two, they don't put enough effort into managing it properly and get really bad results. It just flows on over into what we're seeing here in the markets, guys. I keep telling you guys, you can't separate the way that you view life and the way you view the markets. You can't. You can try, but you're not going to, because all that subconscious stuff about the way that you view life, always a victim, everybody's always doing something to you, it's never your fault. All these things, it follows you into the way that you view what's going on with what's going on in the markets there. So if this isn't a knock on you for feeling that way in general. It's a wake-up call, guys. It's me saying, hey, listen, whether you believe you can or you can't, you are correct. So why not believe that you can? Why not get your mindset correct in life? Because that'll help you so much more as a trader. If you don't believe that you have any control over your life, how in the world are you going to believe you have any control over making money in the markets? It's always going to be that Wall Street or the whales or somebody screwed you. And that isn't true. You screwed yourself. But you're never going to believe that. It's always in your mind going to be somebody else's fault. Don't let that be you. You guys have what you need within you to be successful as traders, to be successful in life, to be happy in life. But you've got to do it. It doesn't happen on its own. Happiness isn't just there. It's your view of things. It's how you relate to the world around you. That's where happiness comes from. Let me see here. Droid DR, what's up, man? He said, got killed with speculative resources stocks at the end of 2008, start of 2009. Realized after I did not know what I was doing. Very painful moment, but really learned a valuable lesson there. Yeah, that was me. 2001 there, dot-com bubble. 2008, that was my top. I called that. So I felt good about that. At first, I was on the side of the idea that that all that government spending, all that Fed spending, QE stuff that kicked in after that was going to, drag the markets, everything down. That was before I really understood what was going on with QE. I was like a lot of y'all are out here right now thinking, you don't know what you don't know. You think that things are that way, right? You think that the Fed's printing all this money, hyperinflation, blah, blah, blah. But, a few years in, I started doing some research on it, really started looking at things. And so I've been doing that for the last almost about 10 years now, I guess. So, what's happened with this bull run over the last, 10 years or so, the secular bull run hasn't surprised me at all. I've been looking for the top, as we got into, 2020, right around that area, looking for that top, 18 to 20. Are we starting to see signs of that top? And we're talking big picture. We're talking, 230 somewhat years of upward movement. That's, and so we look at this now, it becomes the credit bubble, the everything bubble. If it bursts, there should be, if you think about it logically, there should be a huge effect on the economy. There should be. And it shouldn't be anything that ends up real quick. Because everything's been predicated on this bubble. If you think about it, we went off the gold standard, 40 years ago, right? Something like that. 50 years ago, maybe? I got to think here. About 50 years ago, I guess. And ever since then, everything's been being built more and more on credit. And that's really flown up here since the 90s. It's really blown up since the 90s. If you haven't been paying attention. And so there's a lot of excess, there's a lot of waste in there that needs to be cleared out of the market. And that's where we get the huge kind of idea of the bear market, big giant depression. The markets tend to revert. Right? So yeah. Yeah, 1971. Yeah, so about 50 years. I forget how old I am sometimes. I think I'm younger than I am. Better than Tony Robbins? Me? I don't know about that, Boris, but I appreciate it, man. Let me see here. Hank says that Bollinger was calling for a possible top, not an extremely unreasonable call. I don't know that. I didn't see it, so I don't know if you're talking about a local top or you're talking about the top or when you're talking about he called for it. I haven't seen that tweet, so I don't know how to respond to that at the moment. What's going on, Mark? Good to see you checking in, even if late. Are you a mook for seeing a bear div on the daily? Lavo2, he wants to say. Bear div on the daily. You talking about this? No, that's the 1 hour. Are you talking about on Bitcoin? A little bit. So what do we have here? We have, let me kind of close this off here. So we have this bit here. So you have from this kind of topish area to this kind of topish area here. I guess probably that one right there. You got a little couple of wicks that go up beyond it, which is it muddies your view here. But you would have that kind of bearish divergence from there, and it does lead to that pullback, which then gives you this hidden bullish divergence, from here, which then leads to more local bearish divergence there, which leads to more hidden bullish divergence, which is there, which leads to potentially more bearish divergence. But again, it depends on where you're looking at these, because a lot of these are coming up in the middle here, or the swing highs are coming at the lower RSI lows or lower RSI highs there. So, you get this, and often what this means is either you're getting an ending diagonal or you're getting a leading diagonal that's going to break out higher. So usually it's what you see with diagonals, where you see with wedges, is where you'll see this, where you'll see the bearish divergence, and then it'll change with the hidden bullish divergence to the bearish divergence to hidden bullish divergence until it breaks. Yeah. But this whole thing is not a bearish divergence here, because you have these points along the way, these significant tops and significant lows along the way. So yeah, you have to break that down there. Jack, checking in from Amsterdam. Good to see you check in, man. So yeah, so I mean, a lot can happen here. Again, we've got a possible top here on the daily. If we look here, this candle right here, where you've got this large wick at the top and this small candle spread here, this doji candle spread near the bottom. And with that, significantly more volume than the day before, but really on par with your average volume here, which is overall low on this uptake here. So not a strong rejection there. So we got to see if we can get some follow through. Now today looks like a terrible day so far. And so what we would look for is some continuation here to the downside. But again, we're sitting right here above the R1 where we have all this confluence here, all this demand right here. So it would have to work a bit to get through that. Unless they're looking for it to head lower here and bounce here. Again, looking at pivots, the fact that we came in sideways, bounced off the pivot, hit the R1, pushed out, hit above it, hit the R2, usually suggests we're just going to get a pullback into this area above the R1 and then break out higher. It's not all the time, but usually, most of the time, that's what we're going to get from this sort of structure when it comes to pivots. And so that kind of, again, all this rallying anywhere in here kind of aligns with the potential Elliott Wave counts going on there, right? So yeah, definitely something to watch, which is why, as I always say, I get sometimes, still sometimes, I get people that come in and yahoos, right? But they come in and their goal is just to be snarky, just to be disgustingly rude, and just to pretend, or not pretend, but to let us know that they were raised in barns, that they've got no social anything. And they'll come in and they'll say, oh, but look, you were wrong. It didn't go up. Make sure you guys pay attention. I mentioned that if it bounces off the pivot here or the S1, we need to see it break out above this red line to really kind of signal, okay, the bottom is quite probably in. But it still doesn't guarantee it, guys. There are no guarantees here. We manage our risk. But this right here, especially if this is 3 down here and you break up through there, that locks us in as 3. And you're looking for higher. But again, there used to be a lot more, but I still get them every once in a while here. Oh, you're so wrong. You're so wrong. Why am I wrong? You weren't paying attention to what I actually said. But, guys, it's just what it is as part of being online, right? I hope none of you guys act like that to anybody. There's no reason to act like that, guys. It sounds silly, but be the change you want to see in the world. If you want to see the world as a better place, be a better person. Be a better steward of the world. Treat human beings kindly. I mean, gosh, guys, everybody's like, oh, I can't do it. I'm just one person. Man, my ass, you can't. If everybody did, if a significant number of people, if half the people did, if a quarter of the people did it, it would be significant. If people just said, you know what, I'm just going to be nice to people. I'm going to stop showing people that I'm an idiot. And you're an idiot if you're mean to people, if you're rude to people. You're an idiot. And if that hurts your feelings, I'm not going to apologize for it. Go ahead and feel free to leave. But man, life's too short, guys. It's so short. It's so fleeting. And many of y'all are young and it hasn't hit you yet. But those of us that are older, we generally tend to understand this. Life is short. You think at 20, even at 30, that you've got all this time in front of you. And then as you get into your 30s and your 40s and your 50s, people start passing away. All of a sudden, the reality hits you that, man, life isn't as long potentially as I thought it was. There are no guarantees about tomorrow. Maybe I should have a better impact on the world. Just one person at a time. It really is that easy, guys. And I hope if you get nothing else from this stream today, that you get that. Because to me, that's more important than anything I'm showing you guys right here. Honestly. Okay? Let me see here. Let me kind of catch up with you guys. Block Tech, what's up, man? Good to see you here. Let me see. Joy, what's going on? So is the most recent RSI divergence the one that counts? Yes. Yeah, when you have alternating divergences, it's always the most recent one. Yes. Sometimes you'll have a larger divergence that has a smaller divergence in the middle of it, and that'll give you like a bounce or something. But yeah, but in that case, it's the larger divergence that ultimately controls. But yeah, when you've got them coming in like that where they're alternating, yes. And again, usually that happens, and you can see it here. Because you're getting shorter and shorter moves up, right? So you generally, again, you're starting to get to this kind of overlapping, kind of potential ending diagonal type thing, or leading diagonal, which is why you either get the strong breakdown or the strong breakout up. But yeah. It cancels when the other one's done there. So again, if you're looking here, so if you look right here, you've got higher lows right here, and you've got lower lows right here. So there's your hidden bullish divergence, and with that, you can see that you've got this potential reversal type candle, or at least it's a candle that lets you know that demand is showing up. And you know that because you're not getting any strong push down like you've had previously. Instead, you have this big wick to the upside, and then this doji. And then you get this, and then so what you ended up getting was one more local lower low, and then you've got this huge bullish candle there. And that signals, okay, we should be heading up. And sure enough, we do. But, even at this point right here, we look like locally right here. You want to look at this one and this one right here, because those are the 2 points. These right here, this local bit right here. And that's, as we can see here, that's this swing high and this swing high. So then we get the pull down, right? So we got that bearish divergence, which leads to this pullback. But at this point then, now here's the thing. We've got lower lows here with price between those two black candles, and we got lower lows here with RSI. And so at this point, depending on how this day ends, if the day ends anything like this or whatever, or better, I'm thinking we have a large breakout to the upside, because you've got this finishing off here into this area where you're not getting any more hidden bullish divergence right there. So I would be looking for the end of the day or see how this plays out. I think we might end up getting that breakout just looking at that on the day. It could break down and that's it, but I think if it's going to break out and move up nicely, I think it happens pretty soon here, like, day-wise. No, not minute-wise. So, yeah. Pay it forward. That's right. Exactly. Let me see here. Hank said, and also everyone is wrong from time to time. It's not a gotcha if you catch a trade on misreading a chart. Yeah, exactly. I think so much of the nonsense that goes on with social media is you've got, again, new traders coming in and their information is curated to them, by the social media platform they're on. And so it becomes a echo chamber. And so, again, as new traders, you don't know what you don't know. You're echo chambered with a whole bunch of new traders who don't know what they don't know. You sprinkle in a few of big accounts out there that really are you, just with larger followings. So you think they know what they're talking about, and they really don't. And it becomes this echo chamber thing in there. And so then it becomes, if you're wrong, then you're wrong, and you're terrible. But guys, big heads up here. People, you can't stay at trading for 3 years, 5 years, 10 years, 20 years, 40 years, like Brant, if you're not doing it properly. If you are not minimizing risk, maximizing profitability. You understand your charts are going to be wrong sometimes. You understand that the reality is you're a human being. You can't possibly know every possible outcome of every decision, of every variant decision. Because every time you come to a decision, guys, the two most basic are you can do the thing or not do the thing. But often there's a whole bunch of variances in there that you can do the thing in this way, or you can do the thing in that way, or you can do the thing in another way. And so each one of those creates their own decision branches on this big tree, right? So as human beings, we can't possibly know every outcome, guys. So you're kidding yourself if you think you're never going to be wrong, and if you think it's a terrible thing that you are. It's a terrible thing if you are and you aren't using proper risk management. That's what matters. Assume that you're going to be wrong. Assume that you are not going to be right. And that will force you, hopefully, to be more cognizant about your risk, about managing your risk and managing your trade properly. And then if you're wrong, guess what? It's not a big deal. But the newer you are, the more often you're going to be wrong as well. So, these are the realities of trading, guys, that most people don't know. They don't recognize. That most people won't tell you. Because you don't want to hear it. You want to hear somebody with a big account telling you, yeah, it's definitely going to do this. And you want it to be whatever it is that you want it to be. So you seek out those people who are going to tell you what you want to hear. Throughout history, that has never worked, guys. Yes men have never worked throughout history. You absolutely have to be aware of where you could be wrong. And the best way to do that is listen to other people who may have differing thoughts than you, especially if you're very emotional one way or the other. The idea, guys, the goal at the end of the day is to make money and to limit how much you lose intelligently. Right? What's going on, Jay? Glad to have you here. Do I think we're in a bear market for what? I don't think we're in a bear market for Bitcoin. No, I don't think so. We haven't done anything major that needs to. As a matter of fact, the breakout above this range here and the retest and the move back up here leans heavily toward the idea that the bottom, is over here and we're heading up to new all-time highs. No guarantees ever, but that says a lot more. I think that is a lot more likely than being in some kind of bear market where this was the top. Now, talk to me again if we start, especially if we drop here below 37.3. That may be, okay, a wake-up call. Now we got to pay attention. If we're dropping below this swing low, it's not this swing low way down here, but this one over here at 29,300 basically. If we're dropping below that, yeah, then we're heading further down. Your warning is right here at the pivot, but that doesn't guarantee we're going down. Could just be a larger wave pullback. But if we're dropping below this level, again, it doesn't guarantee it, but it means it more than likely, most likely, we're heading lower down. But again, the idea that we broke out of this range here, came back, retested, moved up, leans more heavily toward the idea that the bottom is likely in here. But please make sure you paid attention. I didn't say it guarantees it. There are no guarantees in trading. Lavo, you said you work with some physicians that are total jerks. Makes no sense. Yeah, I don't get what people get out of it. Some people just weren't raised properly. That's what it is. It is what it is. Such a slack. I mean, it's such a waste of life out there. Let's see here. APA, what's going on? He says the 1 hour Bitcoin trading view chart you posted in Discord update shows history back until 7/19/21. Can you post a chart that goes back further? Yeah, I mean, you could just, that chart, you can just bring it up. You can make it yours. Yeah, hit me up on DM there, and after I'm done here today, I'll explain to you how to do it. Yeah. Those charts, I give live charts with pretty much everything I do, and then with the Bitcoin updates in the morning, I give a published chart. But either way, yeah, you can make it yours and go back in time and look all the way through it, what I have. Because I have all this stuff labeled in here, whatever I have with it. Now that chart I may not have because I've been back and forth because we've had issues with some exchanges. That chart that's in there won't have my count back here. But real quick, looking at the possibility that we've got a 1, 2. I'm sorry here. Let me see here. A 1, 2, potentially 3, 4 here, and working on that fifth move, potentially. Yeah, so I think that's probably the most salient count right now. I mean, you could look at this here, and that's kind of a deep pullback, but you could potentially say you've got a 1, 2, 1, 2, 3, 4, and so you've still got 5 of 3 to go. But I think we're more likely, due to the length of time this is taken here and the depth of the pullback, I think this is probably a 1, 2, 3, 4, and we've got 5 here. And if that's the case, we're probably looking at least a target of around 96 to 102,000, potentially a blowout to 180, 186, I think. But even if it's a blow off like that, there's no telling how high it's going to go. So I could see a case for 300 maybe, but right now let's just work on the local here. We still need to get a breakout above the all-time high at almost 65,000 as we're heading up there. But I think we're just doing the whole sub-wave 1 of wave 5 right now. We're still working on that. And that should take us up around that 65 to 72,000 area. Yeah, just as a quick idea of what I'm looking at. Now, prior to that, things get interesting because it depends on how you count this move up here. And if you're going to do a full count, guys, you got to use the BLX. Stop using your Coinbase chart, which starts back here in 16 or 15, or your Phoenix chart, which starts back here in 12 or 13. You got to use the full time frame here. With this, I think it's possible we may have something like this going on that I'm looking at here. All right. And so that then gets us here, as you can see here, a 1, 2, 3, 4, 1, 2, 3, 4, 5, a 5 potentially going there. Now, the thing about this is, here's the interesting thing about this count, is that if I'm correct about the economy and everything kind of rolling over and a big depression coming in and everything, then this count makes sense. Because then you've got 5 waves up from the beginning and it's done, and you have to then correct for that, which is then likely to see price coming back down here to $1,000 or something. I know that's what people don't want to hear. I know, it is what it is. And I'm not guaranteeing it's going to happen. But I'm saying it would make a lot of sense based on if everything else I'm looking at macro-wise were to actually play out. It makes sense. Now, there's other ways you can look at this. Some people here look at this as maybe a 1, 2, 3, 4, and then 1, 2. And they're trying to get some count up here into the millions. I see people saying it's inevitable that Bitcoin's going to go to 10 million. It's not inevitable, guys. It's not. We haven't even broken, above 65 yet. It's not inevitable. Stop listening to nonsense like that. May it happen? I guess it may happen, but man, that's significant. That's a lot of change. But that's what the whole thing, people are hoping that's what happens, right? But they still are viewing Bitcoin in terms of fiat. So, it gets kind of interesting, right? You can notice here the volume drop off we've had since back over here in January of 15. Dropped off there. So, yeah, you have to understand Bitcoin's only been around, guys, in this secular bull market. Look at this right here. We have the low back here in October of 2010. in October of 2010. That, the markets bottomed out in around, after the GFC bottomed out in around March or April. I think it was March of 2009. So Bitcoin's only been around while the market's been in this bull market thing. So stop listening to people that guarantee you it's going to continue up and rally all these ridiculous numbers, especially above 1 million or whatever, when, then they're guaranteeing it to you when Bitcoin's never been tested in a true recession or worse yet, a depression. And what we do know, though, again, I'm going to go back to it, is that Bitcoin is a risk-on asset. And so when we have those recessions, depression, whatever, risk-on assets are sold. Well, everything's sold at first. Everything, gold, everything goes down. Everybody floats to the dollar. And then things like gold and whatever pick up prior to the market reversals, the stock market reversals. But this idea that Bitcoin, no matter what happens to the economy, Bitcoin's going to keep going up, I think is just a bunch of nonsense. There's absolutely nothing out there. There's no historical precedent for it. And we haven't seen it itself work in a depression or even a recession. So we just watch it and see what's going on. We continue to play the upside as long as the upside makes itself, viable. Keep our mind on, on these larger counts, what we're looking at potentially. And then we work on the local counts as we're getting up there. Right? I hope that makes sense, guys. But I know now everybody's going to say, oh, he's such a bear. No, I'm just not an emotional trader, guys. And you shouldn't be either, okay? Because emotion is what's going to lose you money. If we look here at the monthly, how's that monthly look? Monthly, we've got this big bit of... See, I struggle with this as a bearish divergence here because you've got this big move in the middle. And so really, I think it's probably more along the lines of this right here, followed by this right here. And so in either case, there's no divergence there, right? However, what I think that sets up for, especially because I'm expecting price to continue to break out here higher, coming up here, I'm expecting to maybe see a monthly bearish divergence print as we blow off top maybe. So we'll get this much higher high on price, and we'll notch a lower high here on the monthly RSI. And so, yeah, that's what I'm kind of looking at here. You notice the only times that the monthly here has dipped and stayed oversold was here in 2014 to 15, and then here in 2018 to 2019, these bear markets here. Right now, we're bouncing here from right above it. It just dipped right in there. We're bouncing right above it, trying to cross bullishly. So I could see they do something like that and then pull back and fall in, maybe like this. See something like that maybe happening here as you get bearish divergence here. But, the one thing you need to pay attention to is that volume is dropping off back here for the last 6 years now. Almost 7 years as we've pushed higher. So less and less interest relatively here. It just mentions, it just shows a weakening trend is what I'm trying to say. It doesn't say there's a top right there. It's a weakening trend. All right. On the weekly here, you've got this huge bit here. But again, you're not going to look at... Yeah, I mean, you would probably get a lower high overall from this peak here in January of 21. As we went up there, something like that were to happen, then fall back over. Let's see here. I agree, Asymmetric. No time for the jerks. Get rid of them. Fire them from your life. That's right. I missed what you said there, Hank, but I see you say you're just covering your ass in case DXY doesn't go to the mid-80s. Yeah, so DXY. Let me see here. I've got that right here. Again, nothing overly, scary or anything happening at the moment. Still kind of looking at this possible count here. Looking for a reversal up here locally. Oh, man, I didn't even notice that. Look at the daily right here. Finding support on the R1 daily pivot. Again, breaking up through the pivot there on larger candle spread. I'm sure there was larger volume. It doesn't show here with the DXY, of course, but that's a good signal that you're bullish. You went up to the R1, pulled back, pushed up to the R2, pulled back. I mean, this is what kind of thing you expect as price advances if you're looking at pivots. So I'm not scared at the moment here. I'm not scared. Never scared. But I'm not too concerned right now that, this may be the top here. I think even if this was to be some sort of ABC, I think you've still got further upside on it. But, again, macro reversals usually happen there in January at the beginning of the year, which is what we've got here. And so we zoom on out here. Here's the interesting, you want to see an impulsive breakout here above the weekly pivot. That's at 94.15 kind of area. So if you can get an impulsive breakout above that, that'll carry it above this swing high here. This is that 94.742. That's my wave 4. So if you're getting above that, to me, on my count coming down here, this says that's the first real clue that bottom may be in. And we should be looking for higher at that. From pivot standpoint, rallying impulsively above it, especially if we pull back to it and recheck it as support and then continue higher. I mean, break out again, that kind of suggests, well, hey, we just may continue on up through here. There's a lot of, you're adding more confluence for that bullish thought on it. Monthly, of course, again, looking at a potential double bottom here, that should carry price to 97 and some change up here, 97 and a half or so, based on the height of this possible double bottom. From the monthly, you got the move up here, you got the pullback, and then you've got this bullish engulfing right there. And then the month it went sideways, and then we've got continuation this month coming up. Monthly Stochk RSI hasn't broken out and overbought yet. RSI itself is rolled up, heading up. And if you want to see, you can see here that you're actually finding support at this. Remember when I told you the market low was around March of 09? Right here, everybody into dollars until the market low, the stock market low there. And then everybody out of dollar, risk on then. Everybody went into it, right? And so you see that that's the important point there, which is also kind of backed up by what you have going on here in 04 and 05, 06 here. But you see, you hit there, you got rejected, and then it rallied straight through like there was nothing there. Nice big candles all the way through it. It comes back and finds support here back in, what is this? February of 18. Rallies up through, hits that supply, that monthly supply up here, almost hits the EQ, rallies back, or rejects back down, finds support at a potential higher low. And now we're looking to see if we can get some follow through above this kind of area right here that we're in. You see how previously you've got all this congestion right here in 17, and then right here again in 16, and you got all these finding support in that same area here in 15. Congestion again here in 20. Attempt to break out in March of 21, pulls back, breaks, it starts breaking out higher here, so we'll see if we get that further up and through that area. If we do, I think that just launches us up higher there. We can look at these time cycles here. You know, you've got these lows that are at or near these lows here, right here in this area. So it says, you know, the next one would be over here around June of 24. But again, right here you have it. These cycles, by the way, are, I don't know if I've ever shown you guys these. I may not have. But these cycles are, how long are these? These are about 1,185 days, 1,187 days, around that right here. By the way, on the monthly here, you can also note that we've got this hidden bullish divergence that printed out here between, oh, what is that? January of 18 and again here at November of 20. So, you know, none of this guarantees that the dollar is going to continue to rise and whatnot, but, you know, it gives a lot of confluence for the idea that it might. And so you want to see that breakout above this weekly, monthly pivot, impulsive breakout. You want to see it remain above it to really kind of ratchet it in that, hey, we've probably heading up here. And if that's the case, then you're going to notice that the markets start peeling off. You know, it's not going to all happen at once. It's not like the dollar moves up and everything else moves down at that same time. That only usually happens if there's a strong movement, you know, in them. But it's because people, that becomes a risk-off environment, and people leave your stocks and whatever, and they jump on into your TLT, you know, into those long-term government securities and the ETFs with that, and into the dollar. And it makes sense with the dollar because, again, guys, remember, U.S. debt that these countries have to pay has to be paid back in U.S. dollars. So if the dollar starts firing up, they're going to jump in there and try to buy more, which just is like self-fulfilling. It continues pushing that up because the further the dollar rises up, the more expensive their debt becomes. So that's why the government tries to put out these swap facilities and whatnot in those times of need. But, you know, again, these countries and large corporations, whatever, that are, you know, that have all this borrowing, this U.S. debt borrowing, they've got to pay it back in U.S. dollars. So always keep that in mind, guys. Let me see here. I'm just going to check this out real quick. This caught my eye. See what we got here. That's interesting. If you go from the swing high here in January of 17 to the swing low here in January of 21, that 4-year move there, you've got the rejection right here at the end of 18. You got rejection at the EQ in October of 19. And again, comes out following that. Breaks out. Pulls back down here. Look how this works as resistance and support. And here we are, breaking out above it right now. Usually when I'm watching channels, if we have this breakout above the EQ, usually I'm looking at that channel resistance as the next target. That puts you up there at 97 here over the next month or two. 96 to 97. The stuff, again, does August mark the top of the stock market, and then October mark a big pull down maybe? If it does, that would make sense that this would pop up there. So I don't know, just some thoughts, and nothing in there that's actually proven that's going to happen or anything, but just some thoughts about how things might play out, in relation to where these targets kind of are with it. But yeah, interesting stuff, I think. Let me catch up with you guys here. Let me see. What would be a good indicator that balances price-volume relationship? Trying to understand what you mean here. What's a good indicator that balances price-volume relationship? I'm not sure exactly what you're looking for there. DM me over there in Discord, buddy, and explain a little bit more, and maybe I can help you figure it out. It's probably me right now, just got a million things going through my head and just having trouble focusing in on that and understanding what you're saying. But yeah, definitely DM me there, and I'll see what I can do. Oh, you're talking about, that just has to do with the BLX volume? Oh, okay. Yeah. So yeah, I mean, again, the BLX volume. So yeah, let's pop back over there. Yeah, again, overall coming down. Remember, this volume here is normalized as is, or indexed, normalized to the index as the volume is here as well. There's a lot of argument about, okay, well, maybe this is so high here because everybody was inflating their numbers, and that's why it's so high. And, that's possible. That's possible. But I see a lot of incorrect ways of going about it where people just mash together all these different exchanges and price action in their volume, and then they try to derive something from that. And it doesn't work because your price action and volume is local. So price action and volume at one point on one exchange may be different than what price action and volume at the same point on another exchange is saying. Depending on your time frame. Ultimately, overall the markets move in pretty similar movements there, price points and everything. But as you guys know, there are points at which they do diverge, back up over this area here. Wasn't Phoenix like $200 or $300 above what everybody else was? This area here. And then I think somewhere over here, the same thing was happening again. So, I mean, they're never going to be exact because they're different exchanges with different players. But the goal of the exchange is to keep it similar enough to not allow, big anomalies coming out of them. And so your market makers, which are just hired by the exchanges to provide liquidity, their algorithms are based on index prices. And so, so when you've got them all working with that same one, they all try to hug that index price as much as possible. And sometimes those index prices are changed depending on if the exchanges, fall in or out of favor, as far as usage goes. But they try to use the heavy volume exchanges and whatnot to kind of balance it out. Yeah. Let's see here. Scott, what's up? Are horizontal SR levels more reliable, accurate than diagonals in general? Yeah, I would say, I mean, they both work. But essentially, price doesn't move diagonally, guys. In case you didn't know it, price doesn't move like this. Price moves like, let me see here. price moves like this, okay? Or, well, it goes there and then it's here. And then, does it again. So price moves vertically. Or, again, the other way, vertically down. Our perception of time makes it look like price moves diagonally. So, yeah, your horizontal levels are most important. But locally especially, what you find is you can get those horizontal levels which create a diagonal resistance. Something like, let me see here, potentially this right here. It's actually that one right there. It's not this one right here, because if it's this one right here, you see how price just hugs around it, up and forth and over it? It's the top of that there, where price breaks out here on volume and candle spread, pulls back, retests, and continues on. There's the proper diagonal resistance there. And you can see here that actually, does that actually work out here? Maybe, close to it. See, it's just about that right there, off the 2017 swing high, and then that June 19 swing high. Both tops that I gave. And then it breaks out, comes back, retest, continues up. So yeah, your diagonals can still be effective, but your horizontals are where it goes. People buy price to watch it go up. Price, just think in your head, guys. Again, things that seem like they make sense, if you think about it for 2 minutes, really don't. Price doesn't move diagonally. If you buy price, you're looking for price to rise, not to rise and go left, right? Price just rises, right? Price doesn't move like that. Price goes $1, $1, $1, $2, $3. Time gives you a new base for which price to move up or down. So really, all your price movement is just these price levels stacked on each other as price moves up through them and down through them. That's what it is. And at some point, you do create diagonals. But your horizontal levels are where it's at. I don't know if you guys have ever actually been taught that, or if you've ever learned that, if it's ever come to you. But yeah, I mean, that's what you should be understanding it to be. Let me see here. Yeah, exactly, Tell You Rider. And the levels are not precise prices; they're ranges. Yeah, exactly, guys. Think of your resistance and support, or your, as I draw them. This is why I draw mine the way I do. The demand and supply structures, they denote a range, because think of it as a rubber band in there. And depending on how much supply or demand is coming in within that area, price may dip or push higher or lower, depending. But ultimately, it's that area that should provide support or resistance is what you're looking for. You're not looking for that exact price level. And that's one of the harder things to explain to new traders when they first come in, is that, exactly. It's that, well, it's not, if I say this level or this pivot, price could push right through it or stop just below it. There's a fudge area in there. Maybe think of it as a cushion, maybe. So if you sit your rear end down on a cushion, it gives a bit, right? Same idea. Let me see here. Let me kind of catch up with you guys here. For trading breakouts of key SR levels, how do you battle FOMO? I tend to like, so this is this real, brah? I tend to like to trade from the 1 day down, but find myself jumping in and scared I'm going to miss the move by bidding low time frame and not sticking to a 10-hour, a 1 day or a 4-hour retest, etc. Okay, so again, the biggest thing about trading breakouts is that you have to decide on a system and stick with it. Either you're going to buy the breakout the minute it breaks out, or you're going to wait for a retest. That is the simplest way to, first of all, deal with this, okay? Because now you have rules. If you're always kind of back and forth, whatever, you don't have rules. You don't have a system that you're trying to use. Systems are great because they give you rules. Rules should not be violated. Rules are there for a reason, right? Here's the thing. If you're always going to buy the breakout, you're going to lose a lot more often. Necessarily, because often you won't have the right diagonal or vertical, or horizontal level. It'll be a different one. Okay? So it'll break out and then pull back into it, or it'll break down and then pull back up into it, right? So if you're going to be the kind of person that buys breakouts all the time, then you have to buy breakouts all the time. But your risk management has to be just spot on, because you are going to lose a lot. You know, what I mean by that is you're not going to lose a lot of money, though you could. You're going to lose a lot of times. If you buy a retest, that's going to significantly reduce the number of times you're going to lose, but it means you're going to miss some of the breakouts that don't retest. This is the give and take. There is no in between. Okay. Now the good thing is, like what we do with Tier 3 for our Wednesday sessions that we do every week for an hour, is I'm usually talking about some new rules-based system that our members can use to enter a trend. So this is great because me personally, I'm all about buying the retest. And most professional traders I know are all about buying the retest because you limit the number of times you're going to be wrong. You limit your losses overall. And if you do that, like I said, occasionally you're going to miss the big breakouts, the ones that continue up. But if you use these techniques that I teach here every week on Wednesdays, that's okay. You've got a way. These techniques address how do you enter a trend as it's going. And it doesn't mean that you'll be able to enter right that second, but it means, hey, here's what you can look for, nearby that you can look for to potentially enter. And these are the rules that are associated with this entry and can get you in on some really good trades as well. And so if you do that, a lot of this FOMO stuff kind of goes away. You fear of missing out because you're scared, what do I do if I don't buy it and it continues up without me? Because I'm ready to buy it on that breakout because that makes sense. But if it's candles going up, it doesn't make so sense all the more, anymore. How do I, I'm not going to miss my entry. I'm going to miss all that run. And I think I'm probably getting this right? That's what you're thinking, right? Yeah. So the idea is to understand, how do you enter trends? How can you enter trends and do all that? And so, again, that's something that we teach, every week there. Guys, we've been doing it for over a year now. Ridiculous number of rules-based systems there with that over that time. Let me see here. Kind of catch up with you guys. Kind of catch up with y'all here. Jack says he doesn't usually FOMO in. He usually FOMOs out. I sell too quickly, hoping I can buy back cheaper, but then the coin goes up and then I need to get back in. Yeah. And hey, the good thing about that, Jack, is if you're FOMOing out, the good news is you're locking in, hopefully locking in profit, right? And so guys, remember, here's the big secret about trading. Are you listening? Here is the big secret about trading. It is not about buying the absolute lowest price and selling the absolute highest price. That's what you think. It's not. To be a successful trader, it's about constantly locking in profits. There's your big secret, guys. You're welcome. That is literally the secret to trading, to being a long-term trader. Successful trader. So if now, and it sounds simple, you're like, wait, what? But it's not so easy to get your mind wrapped around that. That's the problem. People have a lot of difficulty wrapping their head around it. Wait, whoa. And that causes the issue. Because they can't or they don't want to wrap their head around it. Because it changes the way that they view the markets. And I told you guys, your biggest enemy as a trader is yourself. It's your own it's your own psychology. It's your own emotion. It's not Wall Street. It's not whales. It's not whatever. You do these things to yourself. Trading is simple. It's not easy. There's the thing. But yeah, I'm going to be honest with you guys. That's the big secret about trading. Consistently locking in profits. Because as long as you do that, then time and compounding, and using proper risk management, obviously, but time and compounding are going to get you where you want to go with your where you want to get in terms of wealth. It's going to take time. That's the long and short of it, guys. If you're coming in with $1,000 and you want to be a millionaire next week, guess what? Take your money back out of the account and spend it on something that's going to make you happy. Because you're not. But if you've got a plan, good risk management, you've got a system together that works to where you are consistently locking in profit. It doesn't mean you're not going to lose sometimes. That's where your risk management comes in. But it means that over time, you're locking in profit consistently. Then time and compounding are going to do the work for you. Because anytime you lock in profit, that means you can use a larger position size. Potentially, right? All things held equal. Larger position size means more profit per movement, right? If it's Bitcoin, it's for every dollar, right? Every dollar movement's more profit, right? Take it out, rinse and repeat. Now you've got even more capital. Put it back in. New trade. Goes up, larger profit. Bring it back out. Do it again. That's it, guys. This nonsense where you guys are trying to constantly catch the lowest point or the highest point, it's a fool's errand. You guys are, if you haven't noticed yet, you're going to lose a lot more money than you ever make. Yeah. So that's the key, guys. Too many people, I see it all the time. They don't lock in their profits. And then the market turns on them because they don't know what they're doing anyway. And then they had all these big profits they could have had that end up becoming profits that they don't have. It's no fun, right? Let me see here. So yeah, that's kind of where we're at there. Let me see here real quick. Wanted to pull up the NASDAQ here, kind of see what we're looking at there. Is that marked a new all-time high? Let's see here. So there we go. Hit my initial target here. We've got a secondary target up here at about 15,142. Looking at this, this right here. See if I can make this a little bit easier to see here. So looking at a 3 and then a 4 and looking at this 5 printing out here. Where we've got 1, 2 here. Maybe getting a 3, 4, maybe a 5 as it's printing up there. But looking for a bigger move up. What I'm looking for on the way down is I'm looking for a breakdown below the pivot here. This is the 1 hour or 4 hour pivot right around 14,643. If we can get that, to me, that's the first big clue that the top may be in. And then we've got wave parentheses 4 here at 14,423 and 16 cents. That would be a significant, okay, maybe that top's really in. Because this is your larger count here, this 1 over here back in, was this right around April of 21? Then your 2 down here in May of 21. And then it gets you your 3 up here in July of 21, 4 right there, and 5 up. So, you want to do that, and then the big one becomes down here. This is your large count. This is your large 4, your macro 4 here on this rally from March of 2020. So that's how I'm watching it. Pivot there, that wave 4, and then I'm interested in this wave 4. Those are my big areas that kind of add confidence to the idea that the macro top may be in. Till that point, we continue to work with it higher here and see if it doesn't, and see how much it has in it. The 1 hour, as you can see, is pretty toppy here. 4 hours getting toppy. Daily, daily's about to break out into overbought. You've got a nice bit of, let's see here, that's the weekend, isn't it? Yeah, it's just a weekend gap right there. No big deal. But yeah, so, right here at the R1 pivot, we're coming toward the end of the month here. Price really hasn't done anything. It bounced off the pivot, rejected the R1, dropped below the pivot, broke out above the R1. This is not convincingly bullish here as far as pivots go. You need to see definitiveness. If it comes back and it retests, you need to see this head up and break out. If it falls back below it, that becomes questionable. Moves back above it, becomes questionable. So definitely watch that lower time frame there as it does. Let me see here. SPX E-minis, which is the S&P futures trade here. I'm looking at a potential ending diagonal here. So you got your 3, your 4, and then you've got A, B, C is 1, 2, A, B, C is 3, 4, and potentially A, B, and working on C is 5 here. It got rejected right about at the R1 pivot here. We've got some bullish divergence coming on here. And then right after that, right now, we've got possible hidden bullish divergence showing up here. What we were talking about earlier, that idea, where we've got the bearish divergence followed by the hidden bullish divergence. So we'll see what happens. We're just going sideways. It'll pull us below. It should pull us below this swing low here, which will invalidate that hidden bullish divergence. But if it continues pushing up here, we're going to look there 45.30 next. After it breaks out above it would have to break out above the ascending channel resistance there. And then, of course, the Dow Jones here. Again, I've got a ending diagonal here. This one, though, not quite as far progressed here. And so I'm potentially looking at this as wave A still in progress toward about 35,520. Now, there is the possibility maybe we've got an AB here. And then maybe we've got a 1, 2, 3, 4, 5 kind of thing printing out here. But it still needs to get above this swing high at 35,631 and 19 cents to finish off as wave 5. So if we saw that with this here, it's possible we could be seeing that again. I want to watch that pivot there. That 1 hour, 4 hour pivot right here at about 35,153. If we get an impulsive drop down through that, that's my first clue. Hey, wait a minute, the top may be in. If we continue down through wave 4 here at 34,690 and 25 cents, locally that's going to add a bit of confidence to the idea that the top may be in. But, we need this larger wave 4 down here to kind of come through at 33,271 and 93 cents to really kind of start looking at more macro, maybe top being in. In terms of this right here, we don't have volume here, but if this was to be distribution, what you have is your preliminary supply here. You've got your buying climax. You've got your automatic reaction. You've got your secondary test here. You've got your show of weakness. And then you come up here and you've got what could potentially become here this upthrust area. And then this potentially becomes your upthrust after distribution. Or this is upthrust and we get this higher up here, which becomes your upthrust after distribution. And then you look for that breakdown into here, in which case all your rallies will just be sold into as last points of supply, looking for the breakdown below the range low. Once you get that, because right now you've got this support coming like right here. So you're going to have a breakdown through that, a push up, rejection, then you get your markdown. So a lot of steps still to get to for it. But, ending diagonals, August, we've still got, 6 more days? And set today is 7 days? Well, and then we got weekends, so whatever. We got minus the weekends. It's possible we could top August and, start pulling back. And by the time October gets here, October is that, you get this big move down and up, and then it begins that markdown, maybe in October. Or maybe just the breakdown into this area here. Just kind of musing about the way that it could potentially happen. But, take this with a grain of salt, guys. There is no volume here. So there is no real Wyckoff analysis because you need price action and volume. It's not just price action. It's price action and volume. But if it were to play out as distribution and you've got this, ascending diagonal, it makes a good case for it. Yeah. Hey, Mark, have a great day there, buddy. Have a great day. So I mean, again, we're looking at this here. So, things getting kind of interesting as we look at it all. Again, I talk about this being kind of a real pivotal kind of point in these larger time frames and seeing what may be going on here. Again, this being that this December here, right? So if we're looking here, this is that bigger chart coming off the low here, off the Great Depression low in 31 or 32 right here. And so that gets us a 1, 2, 3, 4, and then that gives us a 5, which we have our 1, 2 previously. This becomes our 3, 4, and 5. And what you'll notice, this period here from 65 through 82 or so is just one large range. You see that? It's just one large range, guys. Here again, from getting up into the dot-com bubble in 99, 2000. And so that first breakdown after that, in October of 2002 or so, where we had the bottom of that market, in terms of structure here, this is reaccumulation, obviously. This becomes the breakout up here. This becomes your spring. So you've got your breakout up here, which is the start of the great financial crisis, the end of 2007. 2009 low in March becomes your spring. And on the monthly here, you can notice just below, boom, right back up. That's a spring. You rally up to the top of the range, pull back, break out. Head on up here. You got another local range here, which is similar to this right here. Now, does that mean we get this right here? No, I'm not saying we have to do that. I'm just saying that this right here ends up being this A, B, C, D, E. Same as what we have here, A, B, C, D, E. It gives us our wave 4 there. These just move up. So if we look at this being the Grand Super Cycle Wave 5, 89-year cycle, Grand Super Cycle being a 233-year cycle, 233 and 89 are both fib numbers, so brings a lot of possibility to it. Being correct there, right? So again, guys, just some things to think about. None of this guarantees that all this stuff is going to happen, but again, there are no guarantees in the markets, and the less prepared you are, the more likely you are to lose money. And, I take it seriously, guys. If you're here, I'm trying to give you information that'll help you not lose money, or at least limit your losses intelligently. If you want to join us, that's great. We'd love to have you at howtotradetowin.com. You can join us over there. Tier 3 has everything. Over 110 hours of video education content that you can go through. We've got 3 live streams every week. Mondays, we look at charts via Wyckoff. Wednesday, what I was talking about earlier, that tips, tricks, and techniques, where we look at rules-based systems, as well as take deeper looks into specific things. Like at one point, before we got the Elliott Wave, which we do now on Thursdays, we look at charts in Elliott Wave, and we discuss it, and we talk about why we choose one thing over another. Same thing with Wyckoff, to help you move from that theory to that application. But, before we started doing every Thursday Elliott Wave, we actually did about 5 or 6 weeks of Elliott Wave on the Wednesdays. So a lot of good stuff there as well. We also take it, at one point we were looking at price action patterns. Another point we were looking at candlestick patterns and how to identify them properly, and how to, it's more, there's no such thing as this candle is a reversal candle. It's always a pause with the potential for a reversal. Always a pause, though. If a candle was a reversal candle, then it would always, every time, without fail, reverse. But they don't. But yet again, guys, the things that are parroted to new traders are not really truthful, right? That's another example there. You guys are taught, oh yeah, reversal candle. Everybody says, oh, reversal candle. No such thing as a reversal candle. It's always a pause. Again, if it was a reversal candle, then its job is to reverse. And if it does not reverse, then it's not a reversal candle. If it is a reversal candle, then it happens every single time without fail. But it doesn't. It's a pause with a potential for reversal. But we discussed that and how to identify and what to look for. So yeah, you know, a lot of this here as we go through this. So anyway, we'd love to have you there, guys. howtotradetowin.com. Oh, before I forget, our friends over at Elliott Wave International, let me see here. They just sent me something here, guys. More free stuff for you guys. Let me see here. You can get on my Twitter profile there and get it. But there it is right there with the link and everything. And so it's today, right? Today at 1 p.m. Eastern. Oh my gosh, it's already going. Ha! My bad. But if you jump in there real quick right now, maybe it'll lock you in there and then you'll get a transcript of it. I was thinking for whatever reason that today was Monday. It's been one of those weeks already. Anyway, guys, I'm going to get out of here. I appreciate you guys joining in as always, and your great, I can't even say it, your great questions. You know, again, guys, everything else I talked about today, if you take nothing from all this, I hope to God, I pray and hope that you took away the idea about being kind. There are not enough people in this world doing that, guys. Step up, be the change, man. And this isn't liberal or conservative or anything else. This is about being a good human being. You know, people out there are really knocked around in life, and sometimes all it really takes is somebody just looking at them and telling them to have a good day, or wishing them a good day, or wishing them well. Being polite, being kind. We take it for granted, you know, this life that we have. It's too short, man. The last thing I want to be known for when I pass is that I was a jerk to somebody. Don't ever want that to happen. And I hope to God you guys don't want that to happen for yourselves either, okay? Oh, does it say Thursday, August 26th on there? Well, great. Check it out, guys. Thank you for letting me know that, Andy. I just, that was what they gave me to share with you guys. So maybe it'll be Thursday, August 26th then. That would make sense since they just gave it to me today. But I'll get with my contact over there and I'll have her updated if it is updated, all right? But again, guys, the most important thing today, be kind. Be kind. It takes so much less effort to be kind than it does to be rude. Why would you want anybody walking around in this world going, man, that guy's a total douchebag? Or that girl, man, what a loser. She's worthless. She does nothing to improve the daily lives of people she meets. All right? All right, guys. So remember, at the end of the day, the only thing you control is how much you lose. Risk management, most important thing you guys are going to do as a trader every day, in and out, okay? So like I said, join us at howtotradetowin.com. We'd love to have you there. If not, I'll be back on Friday. I guess that'll be what, the 27th? At 11 a.m. Central Standard Time, and we'll do this all over again, and I'll see if I can find anything interesting to say to you guys, all right? Take care, guys.